Hello guys, this is Vineet from Edge-Forex and today is the 17th of September 2024 and there is a lot of anxiety in the marketplace and the Fed is in midst of their two-day meeting and tomorrow evening they are supposed to come out with a Fed rates decision. And before I give you my thoughts, let's look at some of the charts and see what market is expecting and what these charts are telling me. And okay, so I'm going to look at these charts as if nothing is happening, nothing out there, and there's no anxiety in the market. It's just another day in the market. So let's just look at from a very rational perspective or very neutral perspective. All right, so I'm looking at the S&P 500 daily chart. So every candle on this chart is 1 day. So let's draw a trend line. This is going back October of last year. Let's say just about 1 year, and it's a straight up, and it's beautiful uptrend. Everything is looking great unless I look at the RSI 21. It's making, so you can see it's moving, it's making higher highs, higher lows, and the RSI is making lower highs and lower lows, which is a sign. I've told you guys, a reversal is nigh. The market is about to reverse, and that's 8 out of 10 times the case. And if that happens, and if we break this trend line, fireworks, and it's going to get ugly. It is going to get real ugly real fast. If this breaks like this, guys, next stop is going to be around this area here. Why? Because that's where there is a major, let me look at the horizontal line support right here. There's a lot of support in this area. So we are looking at least 15%, 15% to 20% correction, or if you guys want to call it crash, if this line is breached. And under what circumstances this line is going to breach, we will discuss that towards the end. All right, guys. So keep it. We're going to come back to this chart when we are discussing what we expect under what circumstances this line can be breached. All right. So let's go and look at gold. Actually, before gold, let's look at the dollar index, DXY. All right. So now it is the polar opposite. Now the dollar index, the daily index, or the daily price of the DXY is not making any newer lows. It's actually slightly higher. Okay, it's the trend line, if I really want to draw, and if I zoom in and draw, it's slightly, ever so slightly higher. Okay, it's not going lower anymore. Okay, but look at the RSI, is even higher than the trend line. So it's telling me that we are in process of reversing. It's not my classic sign where if it was making a lower low and this was making a high, that would tell me, yes, that's my classic rules that I would say, but it's close enough, right? And it's off by 1 or 2 degrees. I do want to bend my rules. No, I usually don't like it. But if I were to interpret, and if I were to put a gun to my head, I would say, yes, this, because of looking at the RSI, is at a much steeper angle compared to the actual DXY values. I would say it is actually reversing. We are in process of bottoming and reversing. So now let's look at our favorite currency pair, EUR USD. All right, guys. So let me remove all these drawings. Okay, guys. So now, even though the price is not making a new high, but the RSI is still getting lower. So I think this is also in process of reversing because it's trying, but it's struggling really badly, and it's not penetrating and it's not going above its previous highs. So signaling to me that, hey, it's about to reverse. So now let's look at our favorite gold, XAUUSD. All right, so let's zoom out a little bit on this. And this is, guys, a perfect chart where it's climbing the proverbial wall of worry, and it's looking beautiful. And right now, gold in the short term to medium term, in the next few days to a few weeks, the gold is nothing but a dollar trade. So if the dollar goes high, it gets stronger, gold will take a hit and it's going to go lower. And if the dollar goes weaker, the gold is going to rip higher, and it's going to rip higher fast. So now let's go back and discuss what is it that we expect is going to happen to the dollar. So let's go back to the S&P 500. Okay, let me remove the drawings. Okay, so now there are one of two things that are possible. First is where Fed goes out and drops the rates by 25 basis points. And the other is they drop the rate by 50 basis points. So now all we have to do is look at the Fed for the cues. So numbers that the Fed is chasing are not overly over the top bearish. So it's not like the markets are crashing left and right. They're not. They're making new highs. So the markets are not too worried about a recession. And if you look at the employment numbers, yes, we had a one bad print, but that's about it. If you're looking for inflation, it's not like it's crashing down. It's slowing down. It's coming into the range of where Fed wants it to be, but it's not crashing down where Fed is now worried that, hey, we may get way below 2% number that they're chasing all the time, or even into deflation territory. No, we're nowhere close to that. So everything is falling into that Goldilocks area where it's just enough for the Fed to drop 25 basis points interest rate, and then wait for December for its next move. That's what we expect. Even though the market, there are a lot of big players in the market that are expecting a lot bigger, maybe a 50 basis point a rate cut. And if it is a 25 basis point rate cut, it is going to be very positive for the dollar. So the dollar right now is sitting at dollar index is just below 101. We are expecting dollar to rise if there is a 25 basis point rate cut. We are expecting dollar to stay even or fall further if there is a 50 basis point rate cut, because as I've told you guys before, money flows where it's treated best. And if the interest rates are too low and they're getting closer and closer to where the European interest rates are, then the money starts flowing out of dollars into euro, into Swiss francs, into Canadian dollars, and all the other currencies. So now Fed has to play that balancing act where they don't want to weaken the dollar too much. They don't want to hit the markets too much, because if they go 50 basis points, markets are going to take hit also. Why? Because now they're going to think that Fed is signaling a hard landing. That is why they are preempting and going really, really hard with 50 basis points. So that is going to go really badly for the markets. And that is also then going to go badly for the dollar, and inversely it's going to go really good for gold. But if dollar goes higher, then gold is going to take a hit in the short term. And that is obvious by looking at the trade, how gold's been trading in the recent months, and it's nothing but a dollar trade, because dollar's been weakening for the last few months, and gold's inversely is being strengthening for all these months. So now, to sum it up, if it is a 25 basis point cut, it is going to help the dollar. It is going to not help the gold too much. It is going to help the markets. It is going to signal that, hey, Fed is working towards a soft landing and not a hard crash. And then if it's a 50 basis point rate cut, it is not going to help the dollar, and then it is going to help gold, and it is going to crush the markets. So that's what I am expecting, but who knows what's going to happen tomorrow. But in a nutshell, our prediction or our analysis tells us that it's going to be a 25 basis points rate cut, because that is what majority of the market players and all the data that we have seen in the recent past is telling us. So let's see what happens tomorrow. I'll be here, and let's watch the news and look at it together live. I'll give you guys. I'll be on our Discord server live while this is happening, and we'll go through this together. All right, guys. We'll see you there.